internet. What's going on?
Hi, everyone. Happy to see you guys back again.
That's right. This is Dave Bath and Beyond, where we're all about mortgages and
More.
more. Boom. My name is David Dowd, and I have my own company, David James Investments, where I can work with over 160 different lenders to help you with your home needs.
This is Bathsheba Payu, and I'm a loan officer in Florida, and my broker is Gross Capitals. We also do over 100 lenders for all kinds of loans, home loans, residential, refinance, commercial. So just give us a call. We'll be happy to serve you.
If you are wanting to follow along, I'll put a link to the selling guidelines for Fannie Mae because we're talking about Fannie Mae guidelines today. And of course, a disclaimer I like to give before we start these videos. This recording is happening on May 4th, 2025. So, of course, always do your due diligence ahead of time because we're human. We make mistakes. That's just how it goes. Make sure you always double check the guidance because they are ever changing. We'll try to keep it as accurate as possible. Today, we're covering, or beginning, I should say, Chapter B3-2, Desktop Underwriter, or DU, as we call it in the industry for short. We're going to be covering the first two sections there, B3-2-01, general information on DU, and following that, B3-2-02, DU validation service. So let's go ahead and kick it off here with the general information. DU.
So, DU validation service helps lenders make loans with more confidence. It is a check part of the loan, like it checks your income, your employment, and your assets by using an electronic report from trusted sources. If these parts of the loans are verified by DU, desktop underwriting, the lender might get some protection against errors, meaning they won't be able to be held accountable for problems with those with specific parts because they've done their due diligence to make sure everything is accurate. However, there might still be some other rules that the lender needs to follow regarding how they check the documents and loans. DU validation service is an optional service only for conventional underwriting through DU. So only conventional they use. They don't use it for FHA or VA. Lenders are not required to participate and may not require the borrower to participate as well. So this is an additional option for lenders specifically for a specific type of loan, which is the conventional underwriting. That is an automated system that triple checks their works for them. So DU is used across the board for all products, but this is an additional service added to this part.
As I was reading over this DU, I was like, this really feels like AI, but this was before ChatGPT, before all of those AIs that have come out recently. So I'm actually really curious to see how this changes, this landscape changes, for better for worse, with AI's implementation. Because right now it's still very algorithm based. Yeah. So it's just like, hey, we feed it the right information, and then it knows what bells and whistles to hit based on that information fed. It's basically what we're going to be going over here. So that's what I'm curious. I just throw that out there right at the beginning, just in case, because man, AI is coming a long way very quickly. And this is the worst that the technology will ever be. A lot of people say that. Well, from this section, it just really deep dives into what Desktop Underwriter or DU does, right? It's like, hey, this is a system that we're trying to automate as much of this process as possible. Because as you know from many of our previous episodes, there's like so much that goes into qualifying a person to get lending for a house. That's because it's a lot of money. It's a lot of money on the line for the lender, and it's a lot of money expected by the borrower to pay back over a very long period of time, whether that's 15 years plus. There's a lot that has to go into trying to automate this process, as you can imagine. It's like, well, hey, I get all this information from my borrower, and I'm going to feed it into this system, this machine that's filled with algorithms that's going to be able to cough out of yes or no. Is this okay? Is this not okay? Because doing it manually, though that is an option with some lenders, and especially for those who don't have credit scores, this is very important for you to know that. Don't think you can't get a house just because you don't have a credit score, folks. But just know that's going to take longer, right? Because this right here that we're reviewing today, this is the automated process, but obviously manual underwriting involves a real person doing it, so it takes a little bit longer, but it's still possible. This is going over all of those little pieces that go into determining how is this system going to figure out whether or not I qualify for a mortgage on a home that I want to buy. And also, what are the things that I need to do in order to prove that I really am eligible in case it runs into some problems? Because remember, it's a machine. There may be things that it just doesn't interpret the same way that a human being would when presented with the same scenario. That's another reason we have to kind of be privy to that as well when we're going through this process. Like, oh no, something came up. We need to figure this out. Try not to, as a borrower, try not to be annoyed about that. Like, just know going into it, that may happen. And that's not a bad thing. Just, hey, I need to show a little bit more information in order for the system to be okay. Because if we we can get the computer to do it, that's amazing. That's a really good plus because, as I've been saying for a long time now, this is cookie cutter. Like, this is where that cookie cutter thing comes from. This is the machine of that makes the cookie cutters for Fannie Mae. So that's because Fannie Mae and Freddie Mac, which we'll get to way later, is the conventional realm. Those two entities, those government supported entities, are what make up conventional loans. And so that's what this is here for Fannie Mae, the desktop underwriter. I think it's LP for Freddie Mac. So you see the underwriting reports, it talks about that, loan case file archival policy. So talking about how old is the information, things like that. That's important because it can only handle so much information at a given time, is what I was reading here, which I think is interesting that it straight up tells us, hey, we can only handle this amount of loan files within this amount of time. And then, of course, we have some reference pages to other places where we can figure out more about Desktop Underwriter here in the underwriting recommendations. And I'm sure as underwriting is going through that for a lender doing conventional lending, this is what they can use here. Far more information about bullet points regarding for the lenders. And then, of course, gets to the bottom there.
So how it works is it has like a report supplier, which is our companies that have an official agreement with Fannie Mae to send verification reports directly to the DU validation service. And these reports will show the supplier's name and logo. The report distributor doesn't have direct agreement with Fannie Mae, but works with report suppliers that will verify the products, and who the supplier sends the data to the DU service, but the report will show both distributor's name and supplier's logo. And so they're going to verify it's a 30 to 60-day report covering a 12-month data. It shows asset verification like deposit transaction, information intended to verify employment using direct deposit, your bank statements, and so forth. So once that information is in, it dishes out the validation results, which you went over, which is great. And it comes either it's validated where DU confirms that the information verification report matches what the lender entered in the DU, and they will say that is a good proof. So that will say, okay, you're good to go. Not validated, the DU finds that the verification report doesn't fully support the information the lender entered. And then it will send a message out saying, hey, we need more documentation. We need you to correct this information right here. Then the last one is unable to verify. Unable to validate is the proper term, where DU cannot check the information because it either couldn't see it in the report data or report doesn't have enough information to validate it. And then the DU message will tell the lender what documents is required to resolve the issue. So it makes it a little easier for us. And this is, like you said, it's very fast versus a manual underwriting. So they can just dish it out and say, hey, we need additional information. We'll need, instead of a 60-day bank statement, we'll maybe need 12 months bank statement, or we need to verify that you can't verify employer. We'll need a contact number or additional information when it comes to that source.
And actually, that's a perfect segue into the next section where we talk about the validation. So let's actually jump over there quickly, because general just gives us a, hey, guess what? It's automated. These are the things, it's a computer, it's a system. And
Yes.
validation, as Bathsheba was very nicely saying there, is basically what comes next, whether it be third-party vendors or just your situation in general with employment and all the different factors that go into determining, does this person qualify for the loan or not? And here's the real proof that they do or don't. And so that's what this next section is about, the DU validation service.
It talks about validation employment. They're going to verify your income. It's basically everything that you put on the 10-003 form. So all that information that we asked about, 2 years of income, your pay stubs, your bank statements, if you have any other additional incomes, if you're a business owner, your business account. So all that they're going to verify to make sure that it's accurate and that it's, it's verifiable. So they're going to check your income. They're going to check your employment. They're going to check your assets, and they're going to check what's in your bank account. Now, what's in your bank account has to be US dollars. So that's very important. And for refinancing, report must show at the last 30 days of account activity. For purchase transactions, report must show the last 60 days of your report information. It also talks about large deposits, gift funds. But gift funds is great. All you need is a letter from the person saying, hey, I'm giving you this gift of $20,000, your parents, for your new home, I'm giving you this gift for $20,000. They do not have to pay me back. If funds are accepted, as long as they're seasoned and we have a letter saying that you don't have to pay it back, we can receive them. Any additional funds, self-employment, they all just need to have those documentations in order for that information.
If you're giving them cash, you're probably going to have to wait a few months of the whole season funds thing. If they hand it to them as, cash, it's like, well, here's a suitcase of $20,000 or whatever in hundreds, hopefully. They give them that, and it's like, well, okay, they gave them the gift, but these are unsecured funds because it hasn't been seasoned yet. So if grandpa and grandma are going to give you the money, tell them, hey, it's really sweet and I really appreciate it, but make sure you deposit that into a bank account. And then we do a little transfer. You write me a check, something where it's like, I can prove that
Paper
this money's
trail.
been in that account for
Yes.
X amount of time. The whole money laundering thing is the reason why they care so much. But either way, important caveat there. But yes, this page here starts to talk about what Bathsheba's already discussed in great detail, is just all the information that we're going to use in this automated underwriter and how it's verifying that information. There's a few different ways this can go because obviously there's a lot of pieces. So with employment, for example, if you provide that information that says, hey, yes, I'm employed, here's a W-2 or here's my contract or whatever it is you have there, depending on how long you've been at this place. And then it's like, well, it uses that information to then go, okay, is it good enough or is it not? As we see later on, which also Bathsheba talked about with the validated, not validated, or unable to validate different, I guess you would call those indicators, put in the information, and then underwriting, the desktop underwriter, the DU, comes back with this particular notification saying whether it's validated, we're good, not validated, hey, I probably need some more information, or unable to validate, yeah, I'm definitely going to need more information. Kind of give you the layman's version of what those mean and why that's important. Because if we can get it to validate, again, smooth sailing, we're going, let's get on with it, right? Let's get our house. But if any of those other ones not validated, unable to validate, then be ready. Like just, hey, don't be annoyed. Just like, okay, cool, something was amiss. Let's figure out what that is. Let's get that information in there, and so that we can get to the same feeling of validated, right? So, and then the income validation, of course, with your job and all the different versions of how you get paid, where that money's coming from and why, right? So whether that's base bonus, overtime commission, alimony, child support, military income, retirement, all those different forms, it can deduce from information provided. That's what this is saying here about desktop underwriting. It's like, hey, I got this information that proves this certain type of income. I can totally deduce that based on my algorithms, based on my programming. That's what this is saying here. Now, if it's anything else, well, we might have to get a little creative, but this covers quite a bit, as you can see. So that's really good. They've built it that way. So yeah, anything you want to use to qualify for the home. So depending on the home too, you may have to start digging into additional income information. If what your 9 to 5 grind or whatever your business is isn't enough to qualify off of that, then that's when we start digging into other potential assets, potential income sources, things like that. So some stuff we've talked about in the past, of course. Again, age of income documents requirements. Again, we want to make sure we're dealing with something that's current and not, something that's like really, really old.
Also, for retirement accounts, if the borrower can withdraw it from the account, then they can use it towards the income or the savings for their purchase. If there's restrictions saying you can't withdraw from it until retirement age, then it's not able to be used towards the purchase of the home because they want to make sure that if they're using it as a savings, they want to make sure that you have access to it if something were to happen and it can be used as a type of emergency fund.
I think this is also an important time to talk about it.
Mm-hmm.
We have the asset of cash because some people get confused by that. When we talk about seasoned funds, it's like, hey, that means it's been in a bank account for like 2 months, 60 days. I know, at least from the government's eyes, from the lender's eyes, and so on, from all the big entities that be, they can see, oh, well, that money could not have been laundered because it's been in a bank account for X amount of days. Otherwise, if it was flipped really fast, there's a likelihood that it could be laundered. Now, we're not saying that. Remember, it's all allegedly. Now, in the meantime, people get confused because they're like, well, why is it that I can use cash as an asset, though, when I'm applying for a home? Like, I can say cash on hand as an asset, but wouldn't that be unsecured funds? And yes, it is unsecured funds, but you can use it as an asset. So it's not to qualify in a sense of like, this is what I'm used for my down payment and my closing costs. No, no, no. I'm going to qualify because in case I get to hard times,
All right,
then I can use this to make a payment on my house. That's how it helps you. People get confused by that because it's very, very thin line in meaning. And it gets confusing if you think about it. If I just told you, yeah, okay, we can't use the money in your pocket to buy your home, but we can use the money in your pocket to say that you've got money to make a house payment later. See, that's confusing. Nobody understands that off the bat. I didn't
No.
until I studied all this stuff.
Right.
So I wanted to make that clarification here. Now, the other thing I figure I would mention as well is the difference between liquid versus non-liquid assets, because that's where a lot of people get confused. Like, what is liquid? Like solid, gas? That's all I learned about these states of matter. I'm like, well, okay, yes. But to make that more prominent, think of liquid as it's there right away. Like the rain is
There you
liquid, right?
go.
It falls on your head. Look, I'm wet. Oh no, I got to go dry my head because I got covered in rain, right? That's liquid assets. I can immediately go and use this to pay for something very, very quickly. There's a little bit of a fine line on how liquid is defined, because it's like should be cash on hand, like literally in an account of somewhere, like a savings account, like an emergency fund, like Bathsheba was saying, that could be considered liquid. But there's other things where if you sold it and it became money, I've seen there's like a thin line of definition between lenders. So be careful
Mhm.
about that. But I would just go in with the assumption, hey, I have it on hand, the cash, and I can use that. That to me is definitively liquid no matter where you go. So even if there's other exceptions to liquidity, that is liquid. So non-liquid obviously would be the things where it's like, well, now I have to go through the trouble of selling this thing to turn it into money, and who knows how long that's going to take. That's non-liquid. So I'm
Non-liquid.
sure you can think of many things. So just to give you the general idea, because again, the definition specificity is going to change and vary lender to lender and situation to situation, but generally that's how those terms work.
And let's go back to income too. Like some people
Sure.
get paid once a month, some people get paid commission only, some people get paid overtime. So for overtime to be considered, you have to be receiving overtime for the past 2 years for it to be counted as income. For commission as well, they have to show a history of you getting this commission. Now, some people get paid weekly, bi-weekly. So we do our calculations. If you're bi-weekly, we'll do
It's 26 for sure. So you
mhm,
take what you're making on each paycheck, figure out what that amount is, multiply it by 26, get that number, then divide that number by 12.
by
And that
12
will give you your
monthly
monthly.
income.
Correct, correct.
And then if you're paid twice a month,
24 instead of 26. So you're just swapping out that one variable there.
yeah, 2 times 12, which is 24, and then we'll divide that by 12, and that's how we'll get your monthly income on that as well. And that's how we can check to see if you are 1099 or if you're W-2, we'll be able to calculate that as well. If you're not getting overtime, like 1099 usually don't get overtime when they're working extra hours. So that lets us indicate that you're a 1099, so we'll need additional income, additional verification documents versus someone that is a W-2.
Yeah, that variable income, I guess this is an important time to bring that up. So let's say you're a 1099, you're a contractor, you're independent, whatever, and your income varies. In that case, we're still going to want to have the rule of two. 2 years of anything is going to be good for most lenders. The thing
Correct.
with variable income, though, and as opposed to those nice calculations that Bathsheba was just talking about with the biweekly or the 2 times per month or even once per week. That's another one too. This is not going to be as nice. Basically, we're going to have to take the average of how much you're making when we do the calculations of those 2 years to figure out what your monthly income is. So it's a little bit different. You're not paid consistently to determine, hey, this is really what the amount is. This is the most fair that it can be based on variable income. That's the way you have to kind of look at it. So for those who do have variable income, I want you to know that, okay? Because yeah, there's some months might be fantastic and other months not so great. We have to find that average in order to make sure it makes sense to the lenders. Like, well, what is the risk? Always trying to accommodate for risk and figure that out. So all these different income types, bonus, overtime, commission, those are similarly calculated to what we've seen with variable to some degree, unless it's consistent. And if it's consistent, then we'll do the same calculations as we've done, but we'll do it separate from the base. So we have the base, which we do the math for, and then we'll do the bonus overtime commission that we'll do the math for in the same way if it's stable, if it's the same, if it doesn't
Fluctuate.
fluctuate. Alimony, child support, similar. Military income, probably similar too, as long as we can show consistency. Again, we can do easy calculations if we can show consistency.
Also,
So,
we have to show that it will continue after a certain
oh,
period of time for it to be
yeah.
counted as your income as well. I think it's up to 3 years. It has to show continuation that you're going to be receiving this child support within the next 3 years, beneficial security for the next 3 years. If you can show that, then we can count it. If not, it's just what David says, just extra income that show that you're able to pay, but we can't count it towards the loan. a home loan
Yeah,
or
and my heart goes out to those who just got a job and they want to buy a house, but they've only been at that job for a few months, maybe under a year.
the good news is if you were studying in that field, let's say you're a nurse and you've been studying to be a nurse and you finally got a job, you still have an opportunity to get a home loan. Well, we'll use your transcripts to show that you were studying. We will use your diploma and then your job, and we can count it. So if you have been studying up for a career and you're finally in that career, you still have a chance. Now, if you're changing jobs and it's totally out the scope of what you were doing, then that 2 years starts over again.
Also, income wise, if you were studying, maybe you didn't have a lot of income while you were studying, whether you were going to work or whether you weren't, right? So hopefully you were working. So yeah, we can count the 2 years and we can use that unrelated field of income as a form of qualification. Again, my heart, it goes out to those who are just getting in the game, just figuring out things, but also wanted to buy a house. You may have to wait depending on what we find out. So your mileage may vary. I say that because there's so many circumstances. Because this is personal finance and because this is your situation is going to be different from another person's situation, I can't just definitively blanket statement everything and say, oh yeah, it's just going to be like this, guys, every single time, because then I'd be lying to you. I don't know that. Bathsheba doesn't know that. Until we've seen your situation, all of the little incremental pieces, we can't really say for certain. To close out this wonderful session here, just know both the sections we've covered today essentially are getting us familiar with Desktop Underwriter and how it works to automate this very complex process of does somebody qualify for conventional lending through algorithms. Now, again, I look forward to seeing how this is improved by AI because I figure AI can be more incremental. Personal finance, once we give it information, and even if it's not exactly the information we need, it can figure out, oh, that's what they meant. And then it won't have the non-valid. It just be like, oh, okay, based on other situations, I can be like, yep, that's still good. So maybe less of the not validated or can't validate situations. That's what my hope would be. So it makes the experience better for borrowers and less complicated for lenders. All right, folks. So I'm going to put our information on the screen right now. So if you want to work with either Bathsheba or myself, please give us a ring. We do not work for the same company, so know that ahead of time. These are different QR codes, folks, but we're just good friends having a conversation.
Thank you guys for looking into our shorts. Thank you guys for watching us. We hope that you've learned something. If there's any additional information, let us know. We're here to serve you. This is one of our passions, and we're excited to give you guys more information.
Yeah, absolutely. Like the video if you got something out of it that helps this get out to more people. And if you're feeling really brave, please subscribe to the channel and turn on all the notifications so you can get more of this information going forward. But with that being said, guys, this is Dave Bath and Beyond. We're all about mortgages and more. We'll catch you in the next one, guys. And until then, be blessed.